On the call this morning, Italian stocks and European banks sink overseas markets as the Greek debt crisis spreads to Italy. U.S. futures are also down 1% on EU debt contagion issues and U.S. debt ceiling concerns, while investors look to Alcoa to kick off earnings season. Crude oil is down 1.5% on bad U.S. jobs numbers and slowing Chinese imports. I'm Alex Steele, and the morning call starts right now.
Good morning. I'm Scott Redler, Chief Strategic Officer with T3Live.com.
And I'm Alex Steele with The Street, and together we bring you the morning call. Scott, happy Monday. Happy Monday, everybody. Let's kick it off. So, lots of negatives seem to be weighing on the market, right? We have the bad June's jobs number. The Greek debt crisis seems to be now spreading to Italy. The U.S. debt talk Sunday went nowhere pretty fast. But I want to talk about the action we saw on Friday. So we were down triple digits, but then stocks pared their losses. What did you make of that kind of price action?
Well, it gets a little complicated because that number on Friday was horrendous. As far as the jobs number, we were like, that's just almost embarrassing. And then you combine that and mix it up with what just happened in Greece, and now they're talking Italy, and Spain is in these headlines now. But what happened on Friday is that the leading stocks that we've talked about over the past 2 weeks acted very well. They went from negative to positive and had a big push, and the indices came well off of their lows. So some, I would say, bulls or even some traders like myself, it gave me some confidence to take some of these stronger stocks and maybe start holding them. So you come in today with the futures down 13, 14 handles, you're like, oh my God, can these strong stocks do it again, or will this be a trend down day? So there's going to be a lot of levels and a lot of things to watch today, because today could be very complicated. And
that was my next question, because when I was looking through a lot of research reports over the weekend, all the analysts are cautious now in the second half of the year, but have not revised down their forecasts. They still expect the second half to be better. So my question was for you today, would you be looking to kind of pick away at going long in some of these names that are holding up better if we do find some good support?
Well, in a day like this, when you have all the futures red, you look to see if anything goes green. Can those stocks that on Friday went green and had power, can any groups or any sectors lead this market off the low? So we have to watch for that. You also have to watch for negative divergences. When the futures go lower, stocks hold in there. So when the market bounces, they're the ones that go first. So if you take a quick look at the spiders here, because the spiders is what we've been trading, I want to show you some levels. This is the floor that we started to put in last week. Remember that little bull flag before the gap up? Well, we tested it on Friday, and it seems like we're going to be there again. If we don't hold 133.15, the next big level will be the 50-day moving average around 132 in the spiders, and this must hold to keep any type of momentum in this market, to keep this market intact. That 50-day moving average on the spiders should hold, and some of the other key sectors that we should get into, some of the higher up moving averages like the 10-day and the 20-day.
And then to add more, cloudy mix into the whole thing, we have earnings kicking off today as well after the bell. Alcoa, we have aluminum prices down almost 4% for the second quarter. Alcoa is down over 9% for the second quarter. So how would you be interpreting Alcoa after the bell? Are you kind of trading into that? Do you think the market's looking at that as a big indicator right now?
Well, if we have a big down day today, people are going to want to grasp on something. If you can't grasp on Italy or Spain or even the debt ceiling, they might grasp on earnings, and earnings are going to be key to move us forward. What kind of quarter will it have, and then what kind of guidance will it give for the third quarter? Because right now, a lot of analysts are starting to say, oh my goodness, we might still be in a slow patch third, fourth quarter, which the bulls are hanging their hat on, might not be as frothy or juicy. So we're going to have to see what happens during this earnings report, and obviously Alcoa leads it off, so we'll be looking there.
Especially that you want underlying prices to move slower than the underlying commodity price, so we'll have to see about that as well.
All
right, so let's